Hello future CAs. Everyone knows that question number 6A is a theory question in your advanced accounting exam. But the amount of theory we have in our syllabus is so much, but it's just one question. You may be worried as to which one should I learn for this one single question of 4 to 5 marks, sir. So what I have done, I am giving you just 10 questions that you have to go through, and for these 10 questions I have gone through all the RTPs, all the MTPs and all the past exam attempts, and I'm giving that best 10 questions that can come in the exam, and in most of the previous attempts we have almost got it right. If you look at the pattern in the past, May 26 it did not come, September it came, Jan it did not come, May 25, September 25 and Jan 26, 3 back-to-back attempts, hat-trick they have given theory. That means they are going away from the trend. So this time in May 26, looking at the past pattern, 3 times theory came. So this time some theory based question, like a sum based question like going concern, those kind of questions can come. But worst case, let's not take the chance, guys. In my view, this time theory is only 50-50 guys, but still let's not take the chance. Let's start off with the first question. The first question, theory question I'm giving you from AS 18. In AS 18 we have one question where AS 18 is not applicable. We have 3 points. Comparison with transactions which look similar but they are not related parties. Let me show you this from my new concept material in AS 18, guys. It will be there in every book. First 3 points where it is exempted from AS 18. Transaction is not applicable for AS 18. One is intra-group transaction in case of consolidation. Next is transaction between two state-controlled enterprises, like two PSUs, transactions between them, and where law permits confidentiality. Banking Regulation Act is one example. It says don't disclose your salary even though you're having bank account in the same bank. This is one. Second type is these transactions over here, these 3 points, it looks like a related party transaction, but it is not a related party transaction. What are those 3? In these 3 only questions have come only in the first point. 2 companies, just because they have a common director, are not related parties unless the director is influencing policy in both the companies in their mutual dealings. Second, if you see sole supplier, sole customer, sole franchisee in which I have significant volume of business, it doesn't become related party just because of this. And third one, people who give me, let's say finance like bank, trade unions, public utility like water supply, electricity supply, all these people are not my related party, because if I turn the power of control, I can control you. But just because of that, they are not related party. Government departments, agencies, including government sponsored bodies, guys. These are 3 cases where it's not related party even though it looks like related party, and in these 3 cases it's completely exempt, guys. This is the first question I want you to go through. Second question, we have another 10 more questions, but what I've realized while doing the work, these 10 questions are exactly same as what I gave for the previous attempt. So exactly that same recording of 10 to 15 minutes I'm attaching in subsequent part of this video for your May 26, because all those 10 questions, absolutely no amendment, very much relevant for you. So same as last time, spend another 10 to 15 minutes from now, finish off those questions, and maximum, I still know you have close to more than 1 day left for your exams. If you solid spend 1 to 2 hours time, all these 10 questions theory will be done, and if it comes in exam, you are ready, and if it still doesn't come also, your knowledge is fully ready, guys, and that's what we need. All the best, keep studying and move on to the next 10 questions now. Let me quickly start off. The first thing is RTP September 25 applicability of accounting standards for a non-corporate company, and RTP Jan 26 AS 22 amendment. Now these 2 are amendments in the last 2 RTPs. Therefore it becomes very important, and these both I have separately explained in a video called 2 amendments in advanced accounting. Hashtag for that video, which is just a 10 minutes video, in the description of this video I will give the link. Go and watch that. So these 2 concepts will be covered for you in that, guys. The next one, in our latest RTP Jan 26, always be careful of latest RTPs, guys. The first question in that is, can interest be included in the cost of inventory? Can interest be included in the cost of inventory is the question. For that, answer is very simple. If I have to show you the answer for that, we just have to go to the definition of AS 16, for which I am taking my accounting standard notes. In my notes, every standard, it's just 1 page. Look at AS 16, just 1 page. Look at AS 17, just 1 side or 2 sides. That's it, guys. That's how my AS notes are. So for this, we have to tell that, yes, any borrowing cost. What is borrowing cost? borrowing cost includes interest, and if that interest is used for a qualifying asset, and if such a qualifying asset can be inventory also, then we will go ahead and capitalize. What is qualifying asset saying? Any asset which takes substantial period of time to get ready for intended use or sale. So here, if inventory is taking substantial period of time and if that interest is incurred for that inventory, then we will capitalize. For example, wine manufacturing companies. So if this comes in exam, you will write, yes, borrowing cost includes interest, write the definition of qualifying asset and then elaborate over there, guys. If you want the exact answer for that, take the RTP Jan 26 latest paragraph is over there. Related to this mock test paper, latest mock test paper of Jan 26 exams, series 2 has this question. In that question, they're asking what are the exclusions from cost when it comes to inventory AS2. So in my notes of AS2, exclusions from cost, these 4 things are there. Interest cost subject to AS16. We just know so if interest cost satisfies the definition of AS16, then we will capitalize. If it is not satisfying, for example, to make cheese can be made in a few days or few hours itself. In that case, I will not capitalize interest cost. Then I will, debit to P&L. Storage cost if incurred for finished goods, selling overhead, and abnormal cost or abnormal loss. These are the 4 things that is not included in cost of inventory, which can be another 4 marks theory question. Why am I randomly discussing this? Not random, guys. MTP, mock test paper, latest it has come. Another question from mock test paper, briefly explain scope and forms of joint venture. Scope and form of joint venture. If I go to RTP, first they are saying scope of AS27 is nothing but accounting for interest in joint venture and reporting of joint venture assets, liabilities, income and expense. Nothing but my balance sheet, asset, liabilities, P&L, income and expense. And they are saying regardless of the structure, form in which the joint venture entity has taken place, in what way it has taken place, it doesn't matter. We will do it. What are the forms of joint venture? The 3 forms of joint venture, what I have explained above. Scope, this standard is there for 3 types of forms. Jointly controlled operations. For example, oil and natural gas. Many companies come together to take mining of oil and natural gas and they will share it, guys. So here, ventures do not create separate entity for joint venture business, but they own the resource for that purpose. That oil extraction, all the oil natural gas companies own it together, so they extract it together. Next, a jointly controlled asset. Imagine Jio and Airtel along with Tri, they control all the telecom towers. Entities separate, but assets alone they share. So they own the asset jointly, guys. Where is this answer there? In your RTP Jan 26. I'm giving you examples so you can easily connect. Jointly controlled entities. What is the key here? Where the venturer creates a new entity. This is the case where A plus B becomes C. 2 private limited or 2 public limited or any combination becomes a separate new entity. For example, Maruti plus Suzuki has become Maruti Suzuki. You will go through this paragraph over here, guys. Again, let me tell you, the goal of this video in 5 to 10 minutes is not to explain the concept to you in detail. Tell you what the question is, show you where the question is, and show you the answer and briefly read that. You will go there later and read that in detail, guys. Or when I'm showing you the answer itself, take a screenshot, read it with me. This 5 to 10 minutes video you can watch for 30-40 minutes and learn with me, guys. Next to 2 questions, this entire set of 5 questions I included in the list last time also. I'm going to include in the list this time also. Why, sir? Not tested last time, so this time again it can come. One of the characters of FS is neutrality. Do you agree? Yes. Look at this. The answer for that is yes. One of the characters of FS is neutrality. To be reliable, FS must be neutral, that is free from any bias. Free from any bias. You should not make judgments. How today you're all judging people so quickly. You will see something on social media, you will judge a person without knowing anything, correct? So they are saying the FS should be neutral, free from bias, know something properly and then only decide, guys. Next, one of the next qualitative characters of financial statements, guys. This is simple. This you would have studied in school, class 11 and 12 also. What are the qualitative characters of FS? Understandability, relevance, comparability and reliability. This is there in our study mat first chapter, guys. Understandability, relevance. Under relevance you have timeliness and balance between benefit and cost, reliability and comparability. I'm not explaining this. You know where to find this in your ICA study mat. First chapter it is there, guys. These two questions. Then the next three questions is there in our module 1, Introduction to Accounting Standards. Introduction to Accounting Standards. In that chapter it is there. If you see, this question 6 was tested in the past exam. Not so far away, just May 25 they have tested. Therefore, I will not consider this in our list. If you have time, read that, guys. But no sir, already no time. I'm reading a few questions. Go through these 3 questions, guys, from this module 1 chapter. Briefly explain the process of issuing accounting standards. There are some steps. Explain the significant emergence of IFRS as a global standards. Go through that. These 2, if you feel it's heavy, okay, that's fine. At least quickly go through. At least out of 4 you can get 2 or 3. But this last one is very important. What do you mean by carve-outs and carve-ins in Ind AS? It has come in many MTPs, many RTPs. This question 9 is waiting to come in your main exam. If ICA allows, it will come in the main exam, guys. So go through these questions quickly, briefly, read them, guys. I'm giving you the source also over here, so you know where to find these questions. Next, the last 3 questions. These 3 questions also was there last time in our list. So again, I'm bringing over here. Sir, same list, sir? No. Look at the first 3-4 questions. It's different. And again, I'm showing you some unique sums. If theory is not coming, what are these unique sums? Only 2 sums I will show you, guys. Next, how borrowing cost will be capitalized when funds by borrowings from banks. Sorry guys, while recording, the green screen behind me fell down, so I just paused and fixed it and came back, took another 10 minutes. So coming back to this question without wasting time, I've just cut that part of me fixing it. You don't have to see that, guys. How borrowing cost will be capitalized when funded by borrowings from bonds issued at discount. Basically, they're saying when you're taking some bonds and that bonds are issued at discount. So 100 rupees bond is issued at discount and that 90 is used for my capitalizing of assets. So that 10 will I capitalize? Answer is very straightforward. Yes, if you look at AS 16 borrowing cost definition, it includes what, guys? Amortization of ancillary costs related to borrowing and amortization of premium or discounting charges. And that's my answer, which is there in the MTP also. If you want to know, look at the answer, just click a photo or just take a screenshot, guys. Thus, borrowing costs comprising the periodic interest payable on the bonds in the question and amount of discount amortized during the period will be included. This is the answer. Quickly go through it, guys. Next question. Amalgamation versus absorption versus external reconstruction. Very old MTP, May 25 series 2 it is there, guys. In series 2. So if I show you that, this is basically very simple. Amalgamation means 2 companies coming together. A plus B becoming C. Absorption means A plus B becoming A. So A is taking over B. So look at this. A plus B becoming C. New company coming. So here they use the word new company is formed. A plus B becoming A means existing company takes over the business of the one or more existing companies. And external reconstruction, a newly formed company takes over the business of existing company. So new company B is formed to take over A, guys. These alphabets itself give you explanation. So if you know this example, easily you will understand difference. Again, pause. Note down these 2 points. Again, come down. You have 3 more differences. Now that you know the concept, you can quickly go through this. Pause, take a screenshot. I'm going to go to the next question, guys. Next one, merger versus purchase. 5 points of difference. 5 points of difference. Whichever class in the country, wherever you have gone, I am guaranteeing you would have studied this, guys. Because in amalgamation, they would have told you, how do you differentiate merger versus purchase? These 5 points will be there in your notes wherever you went for class. So those points I'm showing you in study mat. Learn from your notes, guys. The summary is, or if it's a merger, all assets should be taken over. At least 90% of shareholders should become shareholders of new company. And then if and next one is, the consideration should be given only by in form of shares. For fractional, you can give cash, guys. Same business should be transferred to the other company and no other adjustment should be made in book value. Assets and liabilities should be taken at book value. These 4 points should already be there in your system. This has come in the past and therefore I have included over here. Now going to the last theory question. Why goods are marked at invoice price while being sent to branch? Very, very important question again. Of course, these 10 are important, so I will tell important 10 times, sir. So goods, when you send the goods to branch, sir, I skipped the whole branch account chapter. I told you I uploaded branch video separately for 4 to 5 hours. If you have the time, go and watch. You will go and watch that branch video which I have put, guys. If at all you want to study branch as per your schedule, otherwise learn this theory. When head office is sending goods to branch, first thing is they want to keep it secretive from the branch manager to know what is the cost and selling price. Second, to have control over the stock, because only when I keep a different pricing, I will know control over the stock reserve, all of that comes, and dictating pricing policy. So that to give some incentive to the branch, okay, you have sold so much, take so much percentage as commission, to motivate the branch manager. Go through these points. Don't ask me the source of this question. It's MTP. Take a screenshot and read it, guys. That's it. With this, we are done with all the theory questions, guys. Now, suppose theory is not coming based on the trend. These are the some questions that can come from chapter 1. Whether they will give you some data and ask you whether prepare the FS if going concern is followed, if going concern is not followed. And you have 2 more questions on capital maintenance method. Let me show you where to find them. So basically what, guys, you have to go to the same PDF, first chapter in which I told you neutrality question and qualitative feature is there, no? Come here and you have this going concern question. And in this going concern question, one small illustration is there and they will tell you, prepare P&L. If first case going concern followed, second case going concern not followed. Only thing, if going concern is followed, I will apply accrual concept. If going concern is not followed, I will apply cash basis and do it. For example, here sales will be, what to say, accrual sales. Here I will take only cash sales. That's it, guys. Very easy question. Illustration 1, go through. Been some long time since they have tested this. The other one is a concept called capital maintenance. Is there in your foundation also. Financial capital maintenance at historic level, financial capital maintenance at current purchasing power, physical capital. These are things, and you have 2 illustrations here. Illustration 2 is there, and we have example 9 and example 8. So example 8, example 9 and illustration 2. Now these things in this capital maintenance, they have never tested in the past. Okay, so you can read this. If you have already read this, go read this. Now at this point, if you don't know this, don't spend more than 30 to 45 minutes understanding everything in this video. Again, I will tell you guys, very, very important not to learn new things 2 to 3 days before the exam. But since you have asked me for theory, I'm giving it to you. So ensure that you do not spend more time than what you have allocated for this video, guys. That's about it. Sir, you told 5 marks in 5 minutes, sir. And you have taken almost 15 minutes of our time, sir. My goal is to give you best possible, guys. I thought of 5 marks, it became 5 minutes, it became 15 minutes. That's about it, guys. All the very best. Keep studying, keep going till your group 1 exams get over. I will be there with you. Every day I will come and share some video. This video may be 15 minutes, but it took me honestly 2 hours to do it, guys. And group 2, you guys know Niveda ma'am will come, take over from the time group 2 starts and keep giving you resources. All the very best. Write your exams well. Ace your Jan 2026. Thank you. Tata. Bye bye.